Hello everyone and welcome to a new Backbase webinar. We're here today to talk about PSD2 and above all making it actionable. I think there's a lot of talk, a lot of blog posts, a lot of Twitter feeds about PSD2, but now we dive a little bit deeper, giving you a background of PSD2 and also sharing how it can work for your organization. My name is Jelmer and I'm here together with Backbase's Jouk, Pleiter.
Nice to meet you all.
And before we start the webinar, a few logistical points. Of course, as you are aware, the slides and recording will be available within 48 hours after this webinar. All registrants will receive an email including links to the slides and the recording, so you can share that with your colleagues and use it for further reference. You can also use Twitter to follow @Backbase for the latest updates, and also make sure you get the future invites to webinars and are the first to receive the slides. This is a pretty interactive webinar, so you can participate, ask questions, give your feedback. So for that, you can use the GoToWebinar questions box on the right-hand side, or you can participate on Twitter as well, use the hashtag Backbase. Again, slides and recording will be available and shared with all of you.
Cool. Okay, let's get started. The first thing is, what is PSD2? And maybe to kickstart this off, PSD2 is an emerging payment standard in Europe. And what I would like to emphasize before we dive in for our international audience, so if you're from Asia Pacific or you're from the Americas, a lot of the concept is not just only about Europe and the impact of the payment industry in Europe, but it's basically part of a global trend where you will work with payment APIs, where you have universal account aggregation, and both traditional banks as well as FinTech players can innovate on top of APIs. So we also believe that today's webinar is going to be interesting, not only for people from Europe, but for banks around the world.
Yeah, to dive in and to do a short cap, what is PSD2? So PSD2 is an abbreviation and it stands for the Second Payment Services Directive. It's a new European regulation that says that bank has to allow a secure way for customers to authorize a third-party provider to have direct access to account and transactional data and have the ability to make and authorize payments.
Okay, so in a way, Jelmer, this is also kind of very similar to what we've seen already in the North American market, like many years ago with players like Mint.com.
Yeah, normally you saw, of course, that's a general trend. Something is driven by consumers, it's driven by innovators, and now the regulations are keeping up and they think, hey, this is a great trend and we want to make sure this is available to everybody.
So players like Mint.com or Yodlee or many others in North America, they do something called account aggregation, and They use screen scraping technologies. They do it in North America, they do it in South Africa, they do it in Asia Pacific as well. So this is kind of similar to that. You can still use screen scraping, but now by law in the European context, banks are forced to open up account information.
Yeah, and the option to make payments directly, or at least to authorize payments. There's something I very like here. They put in that directive it has to be secure. So they also put forward regulation about authorization two-factor authentication. That's important, of course, in this world. And secondly, they put the customer in control. It's not about the bank or about companies using data. It's the customer allowing access. And I think that's a change in banking regulation we didn't see before.
All right. Yeah. Okay, so the banks are clear. Okay, so let's dig in and say maybe before and after. So what you here see on the screen is how PSD2 will impact how we access our finances. Here you see a picture before PSD2, basically today's situations in many countries around the world. You can have accounts with multiple banks. You can have debit accounts, credit cards, mortgages, whatever. You have them typically with one or more banks. And if you would like to access your information, you have to log in to each of these different banks separately via their online banking or mobile banking application.
For regular consumers, it's very difficult to get a complete overview of all your financial products and really have insight in your total net worth. So it's a very labor-intensive task to get that overview. That's something that PSD2 tries to fix. So indeed, if we move to the next slide, after PSD2 adoption, you will notice that it becomes possible for third parties, for new FinTech players, for existing banks, or for very creative people themselves to build something that really aggregates the data, because it's now available from all the banks in one single overview. So all your account information, all your financial products, and all your transactions can be consumed in one single dashboard.
So that means over here in the bank needs to kind of open up. They need to open up to kind of give access to the data or to the payment instructions, and all the banks need to do this. And then here we have something like an account information service provider, AISP. So is that something like an aggregator, and they will aggregate account data from multiple banks into a single location? How does that work?
Currently, it's just a concept. And the nice thing is you can apply this label to everything. The concept is that there will be platforms that is going to provide account information services and aggregate their accounts. And that the platform can be hosted by new parties, the mints.com from this world in Europe, but also banks can become an account information service provider themselves and offer their customers access to other banks' accounts in one single bank.
So I guess it's very likely that if banks would like to be proactive, they will become an account information service provider. So instead of just providing the data and then allow others, they could also do it and aggregate from other banks and provide that single point of data.
I think that's the topic also in this webinar. How can you not only see PSD2 as yet another compliancy project, but how can you really use it to your own benefit as well? And becoming the aggregator across banks is one of those things.
Okay, so this is the first element. This is the element of how do we aggregate account data from multiple institutions into a single view. And basically everybody can do this, right?
Yeah.
And eventually everybody also needs to collaborate and contribute to this vision. Let's go to the second part, which is all about the payments part.
Yeah, indeed. I think this is even a simplified picture, and this is the current situation, that the flow from consumer to merchants and then accepting a credit card, paying that credit card as a consumer and collecting that money as the merchant is a complex process. There are multiple parties involved, and this can be, I think, simpler, and PSD2 will make this simpler.
So PSD2 will basically then have a lot of impact on e-commerce, because I guess e-commerce providers can now directly trigger a payment with any bank.
Yeah, it's definitely e-commerce that will be benefiting from this, because they can initiate a payment directly from the issuing bank, so they can skip a few steps. Difficulty is if this would really happen, then they have to build direct relationships with those
a lot of banks. Okay.
To combine it. So probably there's definitely still a place for we call it now a payment initiation service provider. E-commerce players can become that themselves, but probably the agents and the WorldPays of this world, so the default acquirers, will move in this space to enable this and then do this more directly.
Okay, so the notion still of some sort of a payment hub that will kind of create all these different connectors to the underlying banks is still a very useful concept, because otherwise all the banks or every e-commerce player needs to do it on their own.
Yeah, but the main difference as well is that it changes the power to the consumer. With the first example, the consumer has to allow access to all the third-party accounts for the one single hub. Here as well, the consumer has to allow the merchant to do the payment. Yeah. So it's not longer the merchant storing your credit card data and running with it, as they can do currently. Really, the consumer has to put that in control.
I guess also in the context of business banking, this also will play a role, where people might have an accounting system where they do their bookkeeping, and normally from the accounting system they have to upload all the payments into the business banking environment before they can actually do the payment. Is it now possible that if the online bookkeeping software would connect directly with the bank, they can initiate the payment if authorized by the business owner?
Yeah, it's definitely possible that you can skip a step where you now create a batch payment, have to do exports and imports. Bookkeeping software can ask you for approval to execute it directly with the bank.
So if this really works out, I don't have to go anymore to my banking app to make a payment. I can actually do the payment in the context of any third-party application.
Correct.
As long as, of course, they have the connectors.
Yeah.
Clear. Okay, cool. All right, let's move on. I hope for the audience this is kind of the first basic introduction about, okay, how do we do account aggregation, and also how can we have payment initiations, gateways that can trigger payment capabilities within any third-party app without the need to go to the bank. Let's go to the impact. What you see here on the screen is a bit of a timeline. And this is from a regulatory point of view, so we can see when are the standards going to be solid, when do we need to go live with all this stuff. So Jelmer, maybe you can elaborate a little bit.
Yeah, of course. The current aim is to go live with PSD2 in Q4 2018. And with go live is that then banks have to be compliant to the regulatory technical standard that's currently being defined. So of course, this is European regulation, so it will take a while. This is banking regulation, so that normally also takes a while. We all know SEPA and how long that took. So this process already started in 2015 when the first papers on PSD2 were published. Currently, we're in the draft period to write the technical standard. So what is needed to actually be provided? How detailed should the data be that you need to open up? How should you handle authorization? How should you handle two-factor authorization? How are you monitoring fraud, and where's the burden of proof if fraud happens? Is that with the consumers, with the bank? So all that, those technical standards and regulatory requirements are being drafted right now. The goal is to have that adopted in April 2017. And then that's still on European level. We have to turn it into national law. So all the 28 member states of the UA or EU, maybe 27, who knows, will have to adopt this into national law before they can enforce it to banks. It doesn't mean that banks only can start acting when this gets in place and becomes national law. If you know for sure, and as we know with the EU and the national law, it will happen and it will be introduced. You can already start after the European Union defines its regulatory standard.
Yeah, so I guess this is the high level timeline, and this is relevant for everybody in the audience who has a European background. The next slides will be less about the European timelines, but they will all be about kind of the global impact on how can we deal with account aggregation and new ways of doing payments. So let's move on.
Yeah, so a short recap of what we said. So what needs to happen right now, what they're working on. So first of all, the EU sets the regulation and defines the technical standard. That's ongoing. Member states turn this into national law, and then banks need to comply before October 2018 is the current estimate. And how they are complying, how they need to comply, what we know right now, so what needs to happen, are 5 points.
Okay.
So yeah, you can go over them, I think, Jouk.
Yeah, I guess the first one is kind of the authentication part. If someone is doing a request, are they authorized to have access? So that's the authentication part. And I think a future state platform for both banks that provide the data as well as that would like to consume the data. Authentication, of course, is a crucial element, and to make that as simple as possible. Second point is access to payments and enabling the transaction request.
Yeah, and thirdly is the access to account information, so getting access to balances and transaction history from your financial services.
So with these two and three, Jelmer, this is only about the access, right? So this is access to initiate a payment or access to account information.
Correct, yeah.
Right, okay. Yeah. Fee transparency is another one. Is this all for free? I think providing the APIs is for free, but kind of the payment execution might have a fee structure. So it's important that if you ask for a payment, that you kind of understand the consequences of that request and the associated fee structure.
Yeah, I think it's twofold. It's indeed, what will it take to get access and use that information? That's something we need to figure out. But also, this is about highlighting what fees you pay as a consumer and getting more transparent in that, so that becomes available and becomes easier to compare. So more power to the consumer in the end.
Clear. And of course, finally, the fine-grained entitlements. Who is authorized to do what? For each individual, for people with different roles within companies or within families.
Different level of transactions above a certain amount, within a certain geo, that kind of definition.
And that's done, I guess, also to really empower the end customer to set more detailed entitlements on who can do what, correct?
For example, in your bookkeeping example, they get authorized to push payments through upon, let's say, 500 euros. Above 500 euros, still a second approval needs to happen, or it has to go to a different payment flow.
Okay, cool. Let's dig it a little bit in. How is this going to change the competitive landscape? What you see here on the screen is the picture before and the picture after. If you look at the picture before, typically the banks, they have a lot of data. They have payment engines, they have international payment networks, they are connected and they can provide services directly to their customer. And in the digital world, they typically do it via their own internal APIs. They refer to this as an enterprise service bus or an API gateway. And then those internal data and functional capabilities, payment capabilities, are consumed by the traditional online and mobile banking applications. So the only way for the end customer to get access to this is either you go to a branch, you go to a call center, or you go to an online or mobile app, and you can have access to your data and your functionality. And this is on a bank-by-bank level. Moving into the future, you see it on the right side of the picture, you will see that the banks not only have to provide the data and the functionality to their own apps via an internal API or an internal service bus, but they need to expose some of those capabilities, the payment capabilities and the account aggregation information, via a so-called public API. API stands for Application Programming Interface. It's a technology term for developers to have a predefined handshake, how different computer programs can communicate with each other. So an API is a public definition of the handshake. I like to have a payment, I like to do a payment under these conditions, and different computer programs can communicate with each other. So in this case of having an internal API, you now need to have a public API. And that public API will be consumed by your own online and mobile banking applications, just like the picture on the left side. But also in the future, you can have and you will have third-party applications that will consume your public APIs and will have access to account information, and they can initiate payments.
Yeah, for me, the biggest thing we can say with this slide is indeed, as the title already says, there is a change in competitive landscape, where traditionally the bank held its own data, was responsible for its own apps, and had a one-on-one relationship with all its customers, so the bank was fully in control. Now that's shifting. The bank is not longer fully in control and managing all the apps and all the access points for users, but users and customers have the option to not longer interface with the bank directly, but use a third party to interface with the bank. So there is a risk you lose access to your customer or the direct customer relationship.
And is that also then the trigger? I guess people would like, the authorities like to see more competition, more innovation, just like we've seen with the electricity industry and some other industries that, they were initially kind of a monopoly or state-owned, or they were in an oligopoly where you have limited number of players. How do this envision kind of more competition? Is it indeed going to do more competition?
I think it opens up. You already see a lot of fintech startups out there, but they all struggle to win the customer, to gain that relationship, because they don't own the banking backend. And now I think for a lot of new fintech players, it becomes possible to act like a bank without being a bank, because they now can show you transactional data, initiate payments through them. I think that's one change, but above all, it moves the control from a bank to the customer. The customer can decide with whom they want to interact for their data.
You could also argue, and we hear that, it's quite unfair for the established banks, because they made a massive investments in their IT infrastructure. They have all the payments, they have all the legacy systems, and now they need to share that. I mean, is that a fair play field?
I don't know if it's fair or not fair. I think there are also a lot of ways where existing banks can get advantage of PSD2. It's just about embracing it, and then it gives you opportunity. But if you're too defensive, it will indeed be not a nice story.
So if you play defensive, you're probably going to be the victim, and other people can actually benefit from it. Clear? Yeah.
Now I think we have a very nice slide after this. There's this one. Very black and white. I see two strategies in how to handle this.
Mm-hmm.
It's proactive and reactive. And I think banks right now, with the current time frame and the current thinking, they have a choice. Are you either going to implement the minimal requirements to just be compliant and really treat this as a compliancy project that's very reactively, or are you really going to say, hey, this is a change, and with change comes opportunity, and I can change how I interact with my customers, I can change how I handle technology, I can change my partnerships, and even can change my business model and be way more proactive in that sense. And I think we're going to see that split between banks. On one end, here they are the green banks, proactive, the disruptor banks that will be the first to adopt open APIs. They're already experimenting and will welcome a lot of third-party developers and ecosystem to have more opportunities to connect with customers, because they still own the data and they still own the wiring.
Yeah.
And they accept that PSD2 brings a risk of commoditization of the default banking products, and they already start now experimenting and finding new ways to differentiate and new ways to interact with customers.
So if you put this kind of in a game theory or in a competitive landscape, if you just be compliant, you basically also just allow others basically to take your lunch, because you only need to make the investment and you don't capitalize on it. So I guess the minimum level you could do, even if you don't want to disrupt, is okay, if I have to expose it, at least within my relevant geographic market, I'm going to consume it from my competitors to be on parity to show account aggregation as an example.
Yeah, for sure.
Yeah. Okay, clear. So next slide is proactive banks. They have to move to public APIs. Again, we already tried to explain public APIs a couple of minutes ago, but it's all about how do we expose the account information and the transaction and payment capabilities via a public handshake. It's a well-defined definition. So the internal banking applications like online banking and mobile banking applications from the bank, you can consume these public APIs as well. You need to enable third-party providers to consume these APIs and create and innovate on top of your public APIs. So APIs is a very important aspect. We already see it not only in the PSD world, but we see it globally. For banks to actually really innovate fast in this digital world, it's very important that they also expose their internal apps, their core banking systems, their CRM systems, their wealth management, their card management systems. So in general, most forward-looking banks are investing in opening up their legacy systems, exposing the functionality and the data you have already via an internal API. And I think it's a very valuable investment, because on top of that, you can innovate in this digital world and you can really focus on the customer experience layer and kind of buy and build the customer loyalty. But now we have to be prepared not only to have these APIs for internal apps, but we also need to be able to ready for a future where we need to share them. And in some cases, we need to share them with competitors, which is quite challenging. So let's explore that a little bit more. The next topic, the next chapter, is all about the banking API economy. And what you see here on the screen is quite a simple picture. And if you are a follower of our webinars, you've probably seen this picture many times before. But it's all about the emerging two-speed architecture. And two-speed architecture is about the classic speed of the existing backend systems. And as we know, many backend systems and core systems are pretty siloed. And these back office capabilities, the change capability is difficult. So if you look at the speed over here, the heartbeat is relatively slow. So the change capability is limited. And what you see is that in the digital world, based on customer experience demand, but also based on competitive pressure, banks need to invest into a loosely coupled digital world where they can innovate faster. So that's clear. So those are the two heartbeats: the digital heartbeat from the digital consumer as well as the digital competitor, and the classic heartbeat of the internal systems. But in order to enable that faster digital heartbeat, you need to connect the digital world to the core system. So and the only way to do that is via those handshakes, those APIs. So in general, with or without PSD, in Europe or outside of Europe, in Asia or North America, one of the key investments we need to do to enable that digital innovation speed is to open up existing systems via application programming interfaces, via those so-called APIs. So APIs and exposing the data and the functionality of legacy systems is, I think, the foundation of future digital growth. It's the key enabler. Without that, there's only a front end. It doesn't have the real capability. So you need to connect to that real world. If we go to the next slide, it's kind of highlighting, it's a zoom in of what is an API and how does that work. So what you see in change capability is that if you go at the core systems, the core backends, the core data models and the databases or the systems of record, it will take years to replace them or to change them. So in many cases, that's not an option, or there's no economic rationale to do so. But these systems they contain valuable data and valuable functionality. So what we now see is that banks need to be ready to innovate on a monthly basis to expose capabilities from these core systems in a so-called service-oriented architecture or middleware layer. And this is what we call the blue bar here, the API exposure. So together with the business and the IT counterparts in the bank, you typically would like to see a clear roadmap on how are we going to expose core capabilities via this middleware layer. And basically you can define this. The net of this is an API roadmap. What APIs do we have ready by what date? And of course the priorities of these APIs probably will be set by business initiatives. And that's kind of here in the green layer. What type of capabilities do we like to offer to our end customers, to our employees, to our business partners? And what you see here in the green layer is kind of the API consumption. This is also the layer where companies like Backbase play. It's digital banking, it's mobile banking, it's FinTech, and this is the area where you kind of need to innovate at the speed of digital. And typically that is with agile teams in producing value in a matter of days or weeks. Anything you'd like to add? Okay, so this is kind of the distinction. I think the net of this is the API economy is about two things. It's about creating APIs, so it's the API exposure. That is one roadmap, and it's the foundation of the API consumption. And API consumption, the bank can innovate here under their own brand with the apps you control, your own online banking and your mobile banking initiative, the part where you really engage and work on the glass with your end customer, and everything is focused about customer retention and cross and upsell. That's the part you own. And then also next to that, API consumption by, unfortunately or fortunately, whatever how you see this, third parties that will compete.
Yeah, I think also APIs bring the opportunity to build more connected experiences. Especially in banking, we see a lot of silos that we're trying to fix. We don't see that many partnerships because it's difficult to connect different systems, it's difficult to work with FinTech providers, and we see APIs changing this. So APIs bring the opportunity to build a connected experience that you say on everything you already have, like your deposit information, your investment information, your payment information. You can enrich that with, for example, next generation consumer experiences by putting in a third-party API that's going to help you with personal finance management or digital money management, enriching your existing transactions with categorization information or offers linked to the transaction information. You can work with other fintech vendors, like, for example, enabling peer-to-peer lending or wallets or connecting the Internet of Things to an insurance product. All the things that you cannot do standalone, but for what you need third-party data, you can consume that and blend that. Because you expose your own services from the bottom, so you expose your own services. Also, that's something that's needed in this new regulation environment. And at the same time, as Jouk said, you can consume from the outside world to create best of breed mix and match.
So, but that's quite cool. That means in this kind of API economy, we can basically mix and match stuff from multiple sources.
APIs give you access not only to your own internal systems, but also about access to the cool innovations you see out there, because most of the new things have APIs available. And if you have a strong platform in place that consume those APIs, you can blend it together and create your own experience. And then you're truly unique.
Yeah. So I guess I'm just realizing this new popular app, this Pokemon Go app everybody is playing. I think that's like a part of the API economy, right? There's Google, the Google Maps data.
Google Maps, access to the camera, so that's the Apple API.
Yeah.
It is blending in some location data from Foursquare to make sure the Pokemons are showing up of public locations.
Yeah.
It's a technology at the right time and also open technology. They all have a way to talk to each other, and the blend is not unique. It's just all separate apps bringing that together, and that's an opportunity in banking as well. Having cool stuff separately and the value add is bringing them together.
Yeah, so if we go back to the Pokemon Go experience, I think that little app that became a popular global hit, and I think most of the people in the audience have heard some news about it, or maybe some of you actually give it a try or a run. That's a perfect example of the API economy, where you combine different new data sources in a unique new combination, and then of course suddenly you have something that is unique to the end customers. So this is going to impact retail banking, I guess. I guess in retail banking you would like to do account aggregation. You would like to see a one picture, my financial life, a single point, and it could be with multiple banks. But if I log in, I would like to see my total picture, my mortgages, my loans, my credit cards, the total picture. I guess that's going to be a big hit.
Yeah, I see it both in retail banking, business banking, and of course as well in wealth management. Retail banking is very clear, total overview of network across accounts, maybe also hooking up to PFM providers to get more information. That's one. In business banking, it also is access to third-party systems. For example, next to your transactions, hooking up your invoices. Because then you can also consume an API from your ERP or accounting system to get an easier overview, or bringing your account data in your ERP accounting system to see your balances there as well.
Yeah. So on the account aggregation side, I think it would be a very meaningful ingredient, I guess, to be part of online banking or mobile banking. But on the payment side, probably this will create more pressure that there's less need to go to a banking app to do a payment, but you will see more situations where you can actually do the payment within the context of an application, anything. Right?
So in that sense, in context of. Versus standalone, go to a separate banking app. It's now in context of the action you're taking.
So the payment initiation kind of providers, they will really enable kind of in-context payments, and the bank will probably be very invisible there.
Yeah.
Clear. Okay, cool.
So one opportunity, build connected experience. The second opportunity is a complete customer view. We see that there are going to be account aggregations and customer data hubs. Of course, there need to be with fraud, some fraud measures should be taken there. They're aggregating and it should be governed that security is in order there. But there will be parties that are going to have a complete overview of the customer because they're providing that to the customer of all the data you get from banks, and all the data you get from external FinTech apps and bringing that together in one single place.
And that party could be anyone. It could be the bank themselves, right? As a bank. And I can actually now suck up all the account information from my customers if they allow me.
Yeah.
With my competitor banks. And I can really see not only their behavior in my own payment system or in my own CRM system, but I can get a more holistic picture of the customer because we can aggregate. So it's basically a very important set of new data points to create a more complete customer profile.
Yeah, we also got this question a few times in our questions box. So please continue to use that. And a few of the questions were around, does one bank now has access to the accounts and transactions the customer holds in another bank? Mm-hmm. And the answer is yes, as long as the customer allowed bank one to access the account and transaction that customer holds with bank two. Yes, this becomes possible.
But that's for every also you need to authorize a FinTech player.
Yeah.
You need to so there needs to be end customer authorization, right?
There is end customer authorization, customers in control.
Okay. And I guess also then the game is probably by FinTech players and by the banks to convince customers to give that authorization.
The one that is now the primary access point of the customer is going to create that overview of all accounts and apps will have a lot of power.
So that's a huge opportunity. If you can create value for the customer and you can be the first to kind of help them to convince that you're going to take that role, that's a unique first mover.
And I think this also ties back to the question you asked me pretty much in the beginning. How big are the opportunities, or is this more a burden for existing banks? I think this is the opportunity for existing banks. Yeah. I trust my bank. I already have a lifetime relationship with my bank. So I rather have my bank providing, me allowing my bank to access other banks than a new player that I don't know.
All right, Jelmer, but then we can see a future that if we can create value for our end customers as a bank and we get the authorization, right? And we can really aggregate their total financial picture from their credit cards, their loans, everything, right?
Yeah.
From that, we can also do cross and upsell. If we can offer better alternative credit cards with better conditions, better loan terms, whatever, if stuff is expiring, interest rates declining, we can make counter offers. So from a cross and upsell point of view, it could be a very nice mechanism to enable switching products.
In marketing, the more data you have, the more personal you can be. And I think with all this financial data, you can be very personal and very successful in cross and upsell.
Clear. I think, clear. All right, let's move on.
Yeah, so opportunity 3, next to build connected experiences, have a complete customer view, it's also integrate FinTech capabilities. This is more the other way of APIs, not longer, this is really about the consuming side of it. In your API strategy, now it's very clear banks need to have an API strategy because we believe that an open API is the best way to be PSD2 compliant. Mm-hmm. That's the way forward. You can also use that same API strategy to consume third-party APIs to enrich your omni-channel digital banking experience, for example.
Yeah, so what you see here in the picture, and this picture is globally valid. If you're in Latin America, you're in Asia, Japan, Middle East, Africa, North America, it doesn't matter. What you see here is that you've got your core banking. You will expose most of the capabilities from your core systems via an internal API, and you will consume that in your digital banking environment, which is online banking, mobile banking, and you can use for retail business, etc. So that's all great. That's kind of your own digital strategy. And this is all about how do we expose our core systems into our own digital applications. Next to that, you can now also consume and add third-party capabilities from FinTech player as part of your experience. So in this strategy, these FinTech players are not only competing with you, but also you have a partnering and collaboration model. So you can enrich your product and service portfolio, not only by products you have within your core systems, but also products and capabilities that are provided by third-party players you partner with, and you have a shared business model or a shared revenue reward model with these partnerships. I guess that's part of the API economy perspective. You don't have to own everything yourself. You can also partner with specialists and resell their capacity within your own brand and within your own controlled customer experience. Yeah. Okay, cool.
Yeah, and then one question I also noticed a few times in our questions panel. Of course, it's going to be costly to do all this.
Yeah.
What's the ROI?
Yeah, that is a big question, because everybody hates to make these deeper investments and other have a free lunch. So what you see here are some high-level ideas about the business model and where's the return on investment. Let's start with them one by one. On the left side, the green model is all about revenue sharing. So you have API, you give these API to third-party providers, and based on the business model they have and the applications they create on top of your API, you have a sharing model. And that could be revenue sharing, that could be margin sharing, reselling. I think that's the basic model, and it's a detail. It could be fixed, flexible, hybrid, whatever, but it's revenue share. So that's one thing. And that's also brought back to this picture. As part of the overall API economy, you can resell these type of capabilities and you can reuse them within your own brand. Alternatively, you can also, for instance, via PSD2, expose your capabilities to these partners. So that's why it's a bi-directional angle, and they can consume it. And both sides, either one side, one direction, or the other direction, it's all about a business model and a possible revenue share. So that's one. Second is about a fee-based model, especially in the payment side. This is very common. If you do a credit card payment or you do a PayPal payment or Adyen, whatever, all these payment schemes today, but also after PSD, in the end of the day, exposing an API is one thing, but then executing a transaction via that API, that transaction most likely will come at a cost. And typically that is transaction-based. And of course, then there's based on the type of transaction, based on the volume, the different cost structures will vary. It could be a one-time fee, it could be a subscription, eat as much as you can type of model. But these are all, I think, in the end of the day, they are transaction-based, fee-based type of models. And then the final one, a little bit more experimental, a little bit more, I would say, Silicon Valley type of style, the freemium model, where initially you offer some of these capabilities for free, for a certain term or a limited set of data points, a limited set of calls. People get hooked to it, and then once they reach a certain threshold, you move them into the fee-based model. So you start to feed, you do the seeding, the free seeding with the free app. It's like with many online mobile games. You have the game for free, but then within the game you start to pay coins or extra credit coins to accelerate the game. Initially, the game is free, and then you upgrade to the higher paid service. So those are roughly the three models. I would say almost like business as usual. There's nothing new. There's nothing, let's say, extremely creative in these slides. These are classic, known business models. I guess what is very critical here is that APIs and creating these APIs is an investment. Having access to an API can be done for free, but then the eventual trigger, the payment or the utilization of data, that can come with a commercial fee.
So let's dive in a little bit on the PSD2 roadmap. What we already saw, current timeline aiming for Q4 2018. And one remark I want to make here, it's also related to some questions you got. To whom will this be applicable? PSD2, as the regulation, is applicable only to payment accounts. And of course, in the examples we gave, we also talk about loans and investments, because we believe that PSD2 now enables this or forces this for payment accounts, but the whole open API story and the data aggregation story and consuming and exposing APIs should be for all banks and is the future for all banks. So that's one remark I want to make. PSD2 is for payment accounts.
Only for payment accounts.
Only for payment accounts. So therefore it's accounts plus transactional data and initiating and authorizing the payment. But the open API strategy should not be in the proactive strategy be contained to only payment accounts, but a proactive bank.
But defensive, you don't want to expose it to everything, right? Defensive, so that's also where we see screen scraper technologies like the Yodleys or others.
They're stepping in the gap.
They will aggregate more data.
Yeah, they're already doing that.
They do it on a larger scale. We see it happening in Asia Pacific. We see it happening in North America at a very large scale. So they're also next, and I would say almost on top of the PSD2 regulations, you will see aggregators that aggregate more. And they will ask for permission from the end customer to do so. And if authorized by the end customer, they will do it.
Yeah.
Maybe they won't do it via an API, but they will have, let's maybe explain that also to the audience. There's it's like a little automated robot that can log in with your account credentials, and it can actually screen scrape data and products from your existing secure online banking environment and then utilize that data within.
As an example, you have some dashboards that force you to install a Google Chrome extension, and that Google Chrome extension running in your browser will then look over your shoulder when you do internet banking, when you access your investment
Sounds spooky,
account,
Sounds a little bit shaky. So I guess the API
security is far away. So
API part is better. Okay, cool, clear. Okay, let's move into, we've got only 10 minutes left.
Yeah, so we call this the PSD2 ready shopping list. I think if you want to comply to this new regulation, you have to build or buy a solution that enables a few things to be compliant. First of all, the solution you're going to build or going to buy should enable third-party authentication. Example, OAuth, so open authorization, plus a two-factor authorization, so you mean with a hard token, either SMS or with a hardware token, is essential to be secure enough for what we currently think the regulation is going to be.
So we need to have an authentication element there, right?
Yeah.
And then it should be multi-factor, so strong authentication.
Yeah, for sure.
Okay.
Secondly, entitlements. It's very important that there is a way to control who has access to what, when, and how, and to what limits.
And this is mostly to support the end customer, right? Because the end customer should be able to set entitlements.
Yes.
And set permissions.
Set permissions, authorize third parties to act on behalf within a certain limit.
Yeah.
If you're really going with the API strategy, what we think is the best strategy to be PSD2 compliant, it's very useful to do something around API versioning and management.
Yeah, because APIs is one thing, but over time you will see more and more of these APIs. Initially you will see a couple of them, you see dozens of them, you see hundreds of them. So the versioning, what are all these different handshakes? Some of them are getting out of date. Some of the underlying systems will change. You need to update the API. So in order to do that, you need to have some sort of a governance and management model, which people refer to as API versioning and API management capabilities.
Yeah. Fourth point is around fraud and penetration monitoring. If we open up more, we also have to make sure that we are more vulnerable.
Yeah.
So therefore, in this regulation, authentication and fraud monitoring detection are two very important topics.
So do we have to be careful or scared about a future where we have hostile bots trying to access our API and getting access to data they're not authorized to? So is that another line of kind of getting access into proprietary data or payment capabilities?
I don't think this is anything new. It is already out there, and if that bot is now trying to hack through the internet banking website or directly through an API endpoint, it has to be secure in both ways.
So the same security matters you have in place for online and mobile banking also will be applicable on top of these APIs.
With the main difference that now they're trying to regulate it to make sure that everybody's on the same level and can be held upon the same standards.
Okay, and then the final point is developer tools. Why is that?
Yeah, this is more for the experimental or the, let's say, the proactive strategy. If you enable open APIs to give access to the data, and you hope that people are going to build upon your APIs and truly use your APIs to find new business models, to create new apps by the community, it's important to empower that community.
Yeah, but you could also say, I would, and I'm talking totally selfish for, if I would, being with the bank, you could say, of course I need to make these APIs, and I'm going to do that at the minimum level, but I'm certainly not going to make it too easy. And I would like to be more, so instead of the provider type of side, I would like to be more on the consumer type of side. Of course, I need to do the provisioning part at a minimum bare level. And we're certainly not going to make it easy or quick. We're going to delay and we're going to stretch it. So you probably will see a lot of those type of tactics where people will delay. They will delay big time.
And if you do the reactive strategy, then you should not provide developer tooling, indeed. However, know that there already are existing banks across the globe doing that, enabling that, finding new business models with it, finding it easier to develop third-party apps and extensions with it. So they're stepping into that ecosystem.
So that's really, again, the mindset. Are you defensive? Are you offensive?
Yeah.
But, of course, there's quite a few banks there, and they do a nice FinTech hackathon, whatever thing. They do a lot of cool hackathons. But that's only a play thing. It's not like a real business thing.
Big banks like BBVA, like Citi, are experimenting very hard with this. You have Bancor in America building. They have now run 2 different banks that are doing it very well with the consumer.
Mm-hmm.
They just say we do what we do very well: transactions, payments, and we believe.
So they say we've got just
and
like,
they can capitalize.
But it's also like PayPal. PayPal has a very big API on top of their platform. Adyen has the same. They really make very good developer tooling because they say, the more people will integrate PayPal or Adyen or whomever, they will integrate this into the developer e-commerce ecosystems. The more we are integrated in e-commerce websites, the more traffic we will have to our payment engine. Yeah. So with that, if you are looking for volume, the developer tools might make a lot of sense.
Yeah. If you're looking for volume, if you're looking for volume, ecosystem, and if you're looking to experiment and be open to experimenting these things. But very important, the final point we see there, if you go here, it's very important that you align on or select a clearly defined API standard if you want to be successful. PSD2 is a regulation. They're not going to define your API. They're just saying you have to give the option to authorize, it should be 2-factor authentication, you have to do fraud detection, and you have to open up. But then how you're defining your API is not something they're going to say. So banks are free there.
But Jelmer, that's going to be a big zoo.
Yeah.
We have hundreds of thousands of APIs. All these different banks will do something different.
And if then the hub wants to be created, they have to create custom connectors to all those APIs. So we see a lot of initiatives currently in the market that are saying, hey guys, this is not smart. We need to simplify this. Things like the Open Banking Project, things like Bayan, what used to be Swift, it can be defined as an API or a domain model that you can adopt. But banks have to get together, ideally, if they want to be successful in this game, to align how they're going to define their API. Short example, of course, if you put an account name in there, are you going to call it account name or product name or account ID? 3 different options already, and I think banks can come up with way more logical, sensible examples. Ideally, that is aligned so one API can meet the standards.
So it would be very helpful over time if there are at least 1 or 2 or 3, domain models or API definitions emerge. So at least there's a bit of a benchmark. There's a bit of people don't have to reinvent the wheel.
Yeah, this is already happening. They're active. Banks are collaborating. Open source kind of initiatives are starting to do this. And I think it's important to have a healthy future with these APIs.
Cool. Okay, so let's look at the PSD2 roadmap. I guess a few observations. You don't have to wait for the regulators to make it final. To Jelmer's point, not everything is final, but it's one thing we know for sure: it's going to happen, and you can actually have a choice here. You don't have to wait till everything is written in stone. You can already start to prepare. And I guess it's not only for PSD, but an API strategy is something you would like to do in general, in the benefit of your own online and mobile banking applications and in the benefit of your own customers. And I guess it's then secondary to leverage and reuse that investment also to be PSD ready. And actually then it's depending on your strategy. Are you defensive? Are you offensive? Of how you want to play it.
Yeah, and secondly, as I said before, you don't have to limit the scope to PSD2. I think PSD2 is a nice enabler for the innovators within a bank to put open APIs high on the board's radar. If you're reactive, of course, be compliant, stick to it, but it's a nice enabler to go wider than just payment accounts and really adopt APIs, services, give access to third-party developers, and really start to find new business models and mutual benefits.
And if we talk about experiment, I guess it's all fundamental about what's your business model. If your business model is like you would like to be a back office factory, and the more traffic and the more volume you have, for instance, with your payment engine, I guess it would be very good actually to expose that API just like PayPal or Amex and really make it open and enable, basically try to have third-party applications that will drive more payment traffic into your core engine. So if you look to increase your volume, open up these APIs, doing experiments makes a lot of sense, because the more apps run on top of your platform, the more volume. I think it's a no-brainer and it's a classic business model. The other side on experimentation is how do you create end-user apps where you say, I would like to be the primary financial institution. I would like to be the primary financial management application. I would like to control that position. So that means that you have to have an A-class mobile banking and online banking strategy. But instead of only integrating your own data and your own functionality, how can you complement that with data from others. So how can you integrate FinTech, and over time, integrating new PSD2 capabilities is just a normal routine. It is something you can execute within weeks because you have the right framework, you've got the right mentality, and you know how to quickly innovate in the context of the digital world. Okay, maybe to wrap this webinar up and actually to go to more of the detailed questions. There are, by the way, a lot of questions, I believe, right? I think it's like over 50, 60 questions.
What I try to do is to answer most of them already during the talking points and during the slides. So wrap this up and see what we have left over, and else we answer that through email or through Twitter.
Yeah, so I think if you still have questions, you can use the question panel of the GoToWebinar console. A little bit about Backbase, just 2 minutes. As most of you know, Backbase is a software company, and we're really specialized in digital and mobile banking. And our mission is to empower financials to accelerate their digital transformation. Basically, the key word with Backbase is how do we create a superior customer experience? How do we make banking as easy as Amazon or overnight delivery? How do we make it as transparent as Uber? How do we make it as personalized as Netflix? These consumer brands, they kind of raise customer expectations. They are setting the bar. They make these online journeys easy, seamless, frictionless. And the vision here is that banks need to do the same. So Backbase is a software company that actually enables banks to come better in creating a superior online customer experience. What you see here is kind of the overall Backbase platform. At the top here, you see kind of the end user applications. As you can see, this can run on any screen size, from the big screen to the small smartphone applications. We're focused on online banking and mobile banking. And in the context of PSD2, or in context of the API economy globally, Backbase can not only expose its capabilities via online and mobile, but we can now also enable our customers to enable this API economy. So as part of the Backbase platform, you can expose and you can versioning and you can manage these APIs. So your own applications can run on top of it, but also you can enable third-party applications to consume them, and you can create these shared business models. Here in the middle, you see the digital experience platform and the digital banking capabilities. I will not elaborate on that for now. And then finally, the blue one here, with the Backbase platform, and especially with our digital banking service capabilities, we can now provide a digital banking API layer. And that API layer that can do two things. One, it can integrate into your existing systems, into your core systems. I think one of our traditional functions. In the future, when PSD-enabled banks are available and these APIs become available, you can integrate into any PSD2-enabled bank or payment initiation provider, if need so, or in an account aggregation provider. You can hook it up and you kind of integrate it and then use it. Finally, you can also integrate to, of course, any FinTech provider. So what you see here is that with Backbase, you can integrate A, into your core systems, B, you can integrate into third-party banks because they need to share data via PSD2, and you can integrate any FinTech capability you like. So with that, you can have a mix and match of your traditional capabilities, PSD2 capabilities, and FinTech capabilities, and you kind of create these new innovative customer applications that have real value to your end customer. Final remark, and that's also a little bit technical, you can expose. So expose is in two ways. You can expose it directly in your own application. So this is an exposition model where you do it via a physical app, and it's visible to the end user. The second way of exposing is via an API. So that's faceless. You provide it just at the API level, and you enable third parties to leverage the underlying core systems. And both can provide, of course, value. The visual app can provide loyalty, retention, and a cross and upsell directly towards end customers. And the API, which is faceless, can drive traffic to your underlying capabilities. Finally, to wrap this up, it's all about how do we build connected experiences. I think this mix and match vision, where you combine your own logic, PSD logic and API and data capabilities, as well as FinTech players, the future is a seamless end customer experience and fusion of data and functionality from multiple sources. It's basically how do we create the Pokemon Go of banking by utilizing these new data sets and these new functionality capabilities that can A, be within the bank, but also be outside of the bank. In the end of the day, I guess it's all about business model agility. I think most banks, if they think about digital transformation, they think in scenario one. They think in how can we expose our core systems in this new digital layer? How can we make it nice and consistent? How can we make it a little bit more sexy? And I think scenario 1 is a very valid strategy, but there's a little bit more. Scenario 2 is about how do we build a digital-only bank. So how do we reduce our backend systems? We go for a lean core, and we basically build from scratch a brand new digital-only bank, purely focused on the digital channel. And then scenario 3 and 4, I think they're quite interesting. They are the new models. How can we do a banking aggregator where we can enable data and functionality from PSD2 banks? So we basically piggyback their capabilities and we run on top of their core systems and we consume their APIs. How can we mix and match that with FinTech capabilities in order to kind of create this new aggregated application? And then with 4, you do a combination. You leverage stuff from your core, you leverage stuff from PSD-enabled banks, and you integrate FinTech players. I guess scenario 4 is probably the end play for most banks, where you do all 3. And I guess this is a vision of a 5-year type of roadmap. But in the end of the day, regardless of the scenario, it's all about business model agility. And the future in an API economy is all about how do we leverage our existing core systems, 1. B, how do we control and optimize the customer experience? Because there you have the loyalty, there you have the cross and upsell opportunity. And then 3, how do we integrate third-party capabilities, either via PSD2 or via FinTech? How do we mix and match those capabilities to create a more compelling, holistic end customer experience? Final remark about Backbase, we are one of the leaders in this kind of omni-channel digital banking space, and if you have any interest to learn more, please let us know. Let's go to the Q&A.
Yeah, we have still a few minutes left for the Q&A, so we answer 3 or 4 questions, and if your question was not answered during the slides or during this Q&A, we'll reach out through email to make sure that all is informed. As normal, the number 1 question we received in the box is, will this slides and recording be available? And the answer is yes. Everyone now in the audience and everyone registered will receive the slides and the recording of this webinar. Yeah, we get a lot of questions about the role of the customer. He's now getting more control, we say, but it seems like they're not so much aware. Is that an opportunity or a threat? Will this really be as successful as people think?
Of course, as you can imagine, within Backbase, we track a lot of these new FinTech banks. We are pretty early on to kind of become customers of these new business models. And what you see in these new emerging apps, that they make it very intuitive, very smooth to convince people to give more data. So they hook you up to, for instance, your social graph. They hook you up into certain capabilities. They authorize existing bank capabilities. So I think a lot of these modern digital banking apps will implicitly ask the customer to do a lot of authorizations. And they do it as part of a very friendly customer journey, and it's very supportive, and it's just a few clicks on a smartphone. But with those few clicks, you really authorize them to have access to a lot of data, and you really authorize them to do a lot of stuff. So I think maybe even if customers are not aware, these new FinTech apps, and they can be created by FinTech disruptors as well as by banks, I think with proper user experience design and with proper use cases, they will enable a lot of new capabilities for the end consumer. And the consumer will authorize because, yes or no, if the app is useful and meaningful, they will authorize. If the app is less meaningful, they probably will do less so.
Yeah, and we're still seeing questions coming in about the relationship between PSD2 and APIs. Is PSD2 going to bring an API, or I think we have to be again a little bit clear on that. So as we recapped it in the beginning, PSD2, it's a regulation set forward by the European Union, and we believe as Backbase that open APIs is the answer for banks to comply to PSD2. And you explained as well during the webinar the expose and integrate strategy. Can you share a short recap on that?
Yeah, let's go maybe to one of the let's see what's the right picture here. We'll probably have to go back all the way maybe a little bit. Maybe this one is a good one. So PSD2 is basically a faceless. So there is no UI. There is no. It is an IT capability.
It's a directive.
It's a directive, but for banks to implement the directive, at the end of the day, the IT part of the bank needs to make sure that there's a public API for third parties, which could be competitor banks, it could be competitive or friendly or partner banks or fintech players, but third parties, whomever they are, friendly or competitive, you are forced to give third parties access to data and payment capabilities. That is the essence of PSD2. You need to do that, and you need to implement that at a technical level. And the way to implement this is via an API, an application programming interface. So the application is make a payment or access to account information, and the interface is the definition, the handshake, how a third party can actually do the payment or access the data, right? So that PSD2, to implement this in 2017 and 18, you have to do this at a technical level via an API. So that's a given, okay? The second thing is that for most banks to reuse some of their legacy systems, not only for PSD2, but also for digital banking, you need to expose a lot of your traditional legacy system capabilities via a similar type of API. This API is there to actually empower, for instance, your mobile banking application. So the mobile banking application via your internal API can communicate to your COBOL mainframe or to your legacy payment engine or to your wealth management portfolio application. So APIs are not only needed for PSD2 to have third-party access, but APIs are also needed for the bank's own application, like online banking and mobile banking, to reuse core capabilities within a smartphone or within a browser. So in general, for online and mobile banking, as well as for PSD2, banks have to execute and implement an API strategy, right? So that's important. And then there's a business choice to be made about these APIs. Do you predominantly use them for your own purpose, for your own apps? Now with PSD2, you are forced to expose a small subset of these APIs to third-party applications and third parties. With PSD2 around 2018, you need to open it up and third parties can use it. And then the third question is, do you want to open it up and even more? Do you want to play there? So do you want to provide these APIs so third parties can build on top of your platform and they can leverage the capabilities and the data from your core systems? It's a little bit of a long answer. So far, it's all about exposing. We need to expose stuff so people can use it. The other side of the coin is you would like to integrate, you would like to consume. So there's a very nice possible future where if other parties need to open up, basically everybody needs to open up and to have public APIs, there's this huge opportunity for banks to consume. You cannot only consume your internal APIs, which you have to do anyhow, but you can now also consume third-party APIs from competitor banks or from competitor players.
Great.
Does that help?
Definitely. I think that was the right answer. Thank you very much, Jouk, and thanks everybody in this webinar. We're a little bit over the hour, and of course you have more to do this morning, afternoon, or evening. So I'd like to thank you all for attending this Backbase webinar. We'll make sure that you receive these slides and recording, and of course we hope to see you in a webinar we have in a month. Thank you very much.
Thank you. Have a nice day. Bye-bye.